Welcome back to Future You, where your growth drives our communities. So, real talk session today. Andy, I'm walking my neighborhood this past weekend and looking at a few properties on the market, and the price of these homes are really high. Great for me as an owner, not so great for people looking to buy. What's going to give here?
Hey, Andrea, I hope you're doing well. It's a really good question. It's probably the most common question we're getting in our business today. Is this the right time to buy? Is this a good investment? Is this smart? And, I'll take us back a little bit in time. I'd say that over the course of my 30 years in this business, people have always felt like homes are expensive, like it's all relative.
True.
I remember buying my second home in 2004, and I was going to pay $270,000 for a house, and I was panicking. I thought maybe I was making a terrible decision. I was overspending. My parents never owned a home that cost that much before in their lives, and I shouldn't have been buying a house that expensive either at the age of 30. But that house today is worth nearly $600,000, and I wish I'd have kept it longer than I did. I sold it 10 years after I bought it, and to buy another home. And had I kept it, I'd have this really, really important investment in my portfolio.
Right. It's a good point.
Okay, so let's talk about homeownership just from the lens of, is it a good investment? Does it make sense for people to be homeowners in today's environment? And why don't we start with how homes appreciate as an investment? And in general, the average U.S. home appreciation rate has probably been somewhere around 3% for more than 60, 70 years. And that is an average over that long period of time. Now, there's pockets of time when homes didn't appreciate. In fact, they went down in value. If we look at the Great Recession back in 2006 to 2009, there's a lot of homeowners that bought high and they sold low. And many had to short sell their homes, where they were selling the homes for less than what they owed, because they needed to get out of that financial asset and investment, because the recession caused a lot of job loss, a lot of change in careers, and it was a very tumultuous time. So I'm not going to describe homeownership as a zero risk investment. In fact, I just don't think there's anything that's a zero risk investment in today's world. In fact, doing nothing, not buying a home, has been a highly risky decision for people to make just for the last 6-7 years. As if they ever do want to end up owning a home, they're going to spend more on it today. Their money's not going to go as far. So everything has risk to it. But let's talk about this year in particular, 2025. 2025 is a very interesting real estate year. Home sales are down. They're a little bit up from 2024, but in general, they're down from a very long kind of bull market in home values and home sales for, let's say, the last 8 or 9 years. And yet, when we look at the market today and we think, okay, interest rates are up, home prices are up, but there's less people interested in buying homes right now. Why aren't home prices falling in 2025? And the reality is they're not falling. There's now an anticipation that on average, home prices will appreciate even in 2025 about 1.7% annually this year. So how in the world are home prices going up still when there's less and less people today looking at buying homes at the moment? Okay, so I think this chart helps explain why home prices are still appreciating in today's market, when I think many are expecting home prices to really start dropping. They generally aren't right now. Homes are expected to appreciate about 1.7% this year. And you would think this would be the kind of year where home prices started to drop a little bit and get a little bit more affordable, because there hasn't been that much demand for new homes compared to, let's say, 21, 22, and 23. This chart says it all. So the blue line on this chart represents the growth of the U.S. population for the last 20 years. We've added about 40 to 45 million new people in our country over the last 25 years. And the red line, which takes a dramatic drop right after 2005, that represents the Great Recession. That's when the housing bubble bursted. There was a lot of job loss. There was a lot of tumultuous times in the U.S. economy. There were some bailouts of major banks and car makers. And you can see prior to that Great Recession in 2005, we were building about 1.5 to 2 million new homes a year. And since the Great Recession, we dropped as low as building less than 500,000 new homes a year. That's kind of creeped its way back up to that 1 million to 1.5 million new homes being built a year, but it never got back. We still haven't gotten back to the levels of new home builds since 2005. And we got 40 plus million people new living in this country than we did then. Okay. So that helps explain why home prices are kind of staying where they are right now. They've been elevated for the last few years. As Andrea mentioned before, they look like and feel like they're expensive today. They've always felt that way, by the way. They have always felt that way. Homes have always seemed pretty darn expensive for especially first-time home buyers. Maybe if you're doing your first step up, it's hard. It's very scary because the home's cost isn't just the mortgage payment, right? A home's cost also is, the air conditioner goes out or the roof needs to be replaced or, all the things that you want to do with the house and paint it and decorate it and take care of the yard and landscaping and yada, yada. I still believe that owning a home is one of the most important wealth building decisions most Americans make in their life. I've owned now 5 different homes in my lifetime. One of those homes did not perform very well because I owned it during the Great Recession, and I ended up, selling that home for just a little bit more than it was worth. I mean, a little bit more than I paid for it. But every single home I've bought and sold outside of that time frame have been some of the best investment decisions I've ever made.
Annie, that's some really, really great insight. You talked about some of the negatives to being a homeowner as far as the stuff that breaks, but there's a lot of positives besides the investment overall. What are some other positive things to why it is the American dream to own a home?
Yeah. So listen, I already talked about appreciation, right? When you own a home, the hope and the goal is that house becomes worth more over time while you're owning it. And again, that's a 3 to 5% annual incremental. Like over a long period of time, it's averaged 3%. Over the last 5 years, homes have appreciated a plus 5% annually. It's not going to do it this year, but that's been the more recent experience. The other part of value of home ownership is, quite honestly, there's forced savings in this experience, right? When you make a mortgage payment, especially in the beginning, a lot of the payments going towards interest, but some of that payment's still going towards principal to pay the balance of the mortgage down. And that is, from my perspective, a way to force yourself to save money. Not only are you getting the appreciation value of the home if it's appreciating, but you're also reducing the money that you're borrowing against it. That's also increasing principal and equity in your home. There could be tax advantages in owning a home, right? We're not CPAs, we're not CPAs on this call, but there could potentially be some write-offs in owning a home when it comes to the taxes on the property, points you might pay for a mortgage, or even the interest you pay on a house. Leverage can also magnify gains, right? So as you build equity in a home, you have these programs that will allow you to access that equity. And you got to be really careful with this, right? Because you're borrowing more money. But now you have this leverage, right? Whether you're thinking about starting a small business or kids are going to go to college, or maybe you've got some other outstanding debt out there. It's got pretty expensive interest costs. You now have this asset. You have this equity inside this asset you could potentially access to take care of those types of things at a very reasonable interest cost structure, because quite honestly, I mean, rates do feel up comparatively speaking from where they were just a few years ago, but they're still in line with average interest rates on a mortgage when you really look at the historical trend of homeownership and mortgage rates. And it's less expensive than, let's say, credit cards or car loans or personal loans or hard money loans that some people take out right now. It's a less expensive way to borrow money. It also creates stability. I know I'm focusing on the investment side of owning a home and the way in which it builds net worth for people, but there is stability that comes with home ownership and like life stability. Like if you're a family and you have kids and you own this home and everybody knows where to go at the end of the day and you're not constantly moving, that stability can create some financial stabilities and behaviors for individuals or households in this country as well.
Yeah, I think those are all really good points. And, when you talk about the things like credit card debt and those rates being significantly higher, there are a lot of people that are so focused on when they bought their home and their 4% interest rate, and they can't ever imagine getting rid of that 4% interest rate. But then when you holistically look at their finances, they're spending a lot in other types of debt that they could blend it in with that lower rate and really just completely change their finances overnight.
There's a lot of risk in owning a home. There's also a lot of risk in not owning a home. But let's just talk about it from the simple perspective of net worth, median net worth. What's the person right in the middle's net worth that are homeowners, that are not homeowners? And right now, there's about a 38x times difference between the United States population that are homeowners and are not homeowners. So the median net worth of homeowners in the United States today is about $396,200. The median net worth of non-homeowners is $10,400. That's an incredible disparity between the two. And it's not just because non-homeowners don't own homes, therefore they're not making the appreciation on the value of the investment that they have. It has probably to do with a lot of other things as well. But once you get into homeownership, and once you can stay within the homeownership population of the United States, I showed you guys the chart earlier, right? That we're not building enough homes and the population's growing. So the reality to it is home prices might slow in growth for the next couple of years. We might even have a couple down years in home values where they depreciate for a year or two. We don't know, right? Like anything can happen. But in general, historically speaking, if history repeats itself with homeownership and the appreciation of home values in the United States, as long as you're looking to be a homeowner for, let's say, 10 years or longer, and it doesn't have to be the same home, but you stay in the homeownership world for 10 years or longer, your net worth is going to substantially increase by being a homeowner, because that is going to be, for most of us, the biggest investment in our lives. And that investment is stable and sound. And there's a supply and demand reality to this, right? There's not enough supply of homes in the United States to really take care of the rising population. And demand continues to go up, right? If interest rates start to go down just a little bit, it's going to increase the demand of homeownership exponentially whenever that happens. And that's why we even recommend for homeowners to say, I'm sure you can read a ton of headlines right now to say, hey, we might be in a housing bubble, interest rates are high, the cost of buying and owning a home is the highest it's been compared to median income in a long time. That is all true right now. But if these interest rates drop 1%, 1.5%, if all of a sudden you can get below 6% interest rates to own a home, the demand is going to fly through the roof. And when the demand flies through the roof, you're just going to see what would, maybe a house that would cost $300,000 today, it's going to cost $330,000, $340,000, $350,000 shortly after a drop in interest rates like that. And so it's going to offset any type of hopeful savings you would have in waiting to buy a house right now. So I think trying to time the market on homeownership is the wrong approach. I think what's the right approach is making sure, A, you can afford it. B, you're buying a home in a location that's good for you, your family, and the location is a desirable location wherever you're looking to buy. Location really matters in the performance of home appreciation. And 3, that it's something that you feel will fulfill something with inside you or your family, right? Are you the type of person that likes to own a home? Are you the type of person that likes to make it yours? Will it satisfy you in some regards to your life experience? If you've really found the home that you love, buy it, marry it, invest in it. And if you feel like interest rates right now are not optimal fall, dating the interest rate means you could use this mortgage to buy the house and then eventually refinance the mortgage when rates go down. Think about a home certainly from an intangible way of what it means to you, what kind of value it provide to you emotionally, mentally, and your family. But think also about it as an investment. And my experience and my recommendation on home ownership is it's probably the most important investment in U.S. households, really for generations.